Hello, no warm welcome. You've joined us on Buy Now, Sell Now right here on ET Now, and this is a show where we address all your stock-related queries. You can WhatsApp us all your queries, and we'll try to answer them from our experts. You can mention the name of the company, you can mention the quantity that you hold, the purchase price, your time horizon, and we'll try to get them answered over the course of the next 1 hour. We will also be joined by a whole host of experts, but before that, let's take a look at how the markets are performing in today's trading session and turning out to be a good day for Indian markets in line with how other Asian markets were performing. In fact, Nifty is now up nearly 280 points in today's trading session, nearing that 25,000 mark yet again. Nifty Bank, meanwhile, is up 350 points above that 55,200 mark, and several sectoral indices continue to trade with gains today. In fact, Nifty Pharma Index is the only sectoral index which is bleeding today. But apart from that, we have IT Index, which is the biggest sectoral gainer. Nifty IT Index, in fact, is up nearly 2%. Infosys, Tech Mahindra, HCL Tech, Persistent Systems, all of them gaining anywhere between 1.5 to 2.5% in trade today. FMCG index is also gaining, and a whole host of stocks from FMCG index continue to trade with gains. So we have the likes of Vun Beverages, which is up 4%. ITC, Tata Consumer Products, Nestle, Godrej Consumer GCPL, Marico, Dabur, all of them gaining in excess of 1.5% in trade today. But on the flip side, as I mentioned, Pharma Index continues to bleed today. Nifty Pharma Index is down 0.5%. We have Sun Pharma down 3% after it reported weak set of numbers. Brokerage houses too are not very positive when it comes to Sun Pharma. That stock is trading near that 1670 odd level after reporting its numbers. Glenmark Pharma, Biocon, Torrent Pharma, Divi's Laboratories, all of them bleeding down anywhere between 0.5 to 1.5% in trade today. But keep sending all your stock related queries and we'll try to get them answered from our experts. And today on the show we have Akshay Bhagwat joining us to answer all your queries. Akshay, thank you so much for taking your time out and joining us here on ET Now. And before we talk about queries that our viewers have started pouring in, first up let's talk about the index, because we've seen a solid run up yet again. Of course, we are reversing most of those losses which we registered in yesterday's trading session, nearing that 25,000 mark on the Nifty. What will your view be on both Nifty as well as Bank Nifty?
Good morning, Ashesha. So, if you look at yesterday's weekly expiry, the buy trigger came in exactly the last half an hour of trade, where there was a sudden spike in momentum that comes exactly at the support zone of 24,500. And today you have a pullback rally scenario back again, where the momentum from yesterday's closing hour continues. So, right now, as the positioning goes, the broader trend continues to be positive. 24,500 clearly is the support, and the first attempt with the market should make for is the swing high of 25,100. So with a positive view, 25,100 is the immediate resistance or the target area you can look forward to. I think the positioning is Bank Nifty is better than the Nifty index. Here, Bank Nifty has seen range bound trading action since the beginning of May, and it's time that Bank Nifty now stages for a major breakout. So right now, levels to keep in mind, 54,800 is an important support, and the immediate target area would be 55,700, post which Bank Nifty attempts a major breakout, which in all likelihood looks a likely scenario.
That's the take on the index coming in from Akshay. Akshay, hi, this is Snehi also joining in. Good morning. Before we start addressing the queries, also give me a sense of what you are making of the broader end of the market today, because the index is up and away, looking very firm, but we can't say the same for the broader end of the market. Now, the broader end has been showing support when the index has been lagging, but today that has not been the case. Give us a sense of where you are seeing the mid cap and the small cap space heading from here on.
I think looking at the market breadth, I think it is more supported by the heavyweights. If you look at stocks like Larsen and Toubro and ICICI Bank and Axis Bank, these are the heavyweights which are strongly making a comeback and supporting the Nifty index. A lot of IT names like Tech Mahindra and HCL Tech, Infosys, they too are joining the party. So it's more of a day for the heavyweight indices. Although yes, mid cap Nifty is slowly making a comeback pullback, if you were to take the day as it progresses, I believe it is more of large caps which should support the benchmark and see it crossing 25,001 again, 100 once again. As far as small and mid cap space goes, the underlying strength is strong. If they do not participate today, in the next week, that is the expiry week for the futures and option series, you can see again the mid cap and the small cap index making a comeback.
The broader markets, but we now have some questions that have started pouring in, and the first question has come in on Indent Bank. Remember, the stock has been in focus for the last several months after it reported some issues, especially with respect to accounting for its derivative transactions, and the stock currently is trading at about 790 odd levels. Krishna from Chennai, he is holding about 150 shares of Indent Bank, which were bought at an average price of 1485 rupees per share. The stock currently at 790. He is making considerable amount of losses on this particular position. He is asking whether he should dump the shares and book losses, or can he continue to hold them for another year with the hope of reducing his losses. So Indent Bank, what will your view be, Akshay, on this particular counter?
Well, see, honestly, Indent Bank is a stock which is more in news because of the the negative news flow, unfortunately, which is hitting this stock as of late. A lot of any recovery attempts, you see some of the other news flow which pulls the stock down again. So right now, technically at least, the scenario is choppy to weak. There is some support zone which is slowly building at the levels of 700, but that evidence is not enough from a longer term perspective. As I see right now, a small pullback scenario of 850 might be likely, but since the viewer is in considerable losses considering the high levels of entry made, at least going by the current news flow, there is no evidence or technical evidence which makes me or gives me clarity of any major pullback in the short or medium term scenario. So my recommendation is better switch over to stocks like a Federal Bank or an Axis Bank, where the positioning is strong, where the technical chart structure gives a lot of promise from a 1 year plus holding. So the advice is exit Indent and might as well switch over to Federal or an Axis Bank.
That's the take coming in. Preference shifting towards some other banks away from Indent Bank is the call from Akshay coming in. But Akshay, help us with Vun Beverages as well, because our viewer Shaurya from Gurgaon is writing to us. Stock in question, Vun Beverages, he is asking if he can enter right now and make a fresh entry at these current levels and hold it for a year. And if he wants to hold for a year, what are the 1 year targets that you are expecting for Vun Beverages to reach?
Yeah, so Vun Beverages, from a risk reward perspective, the current levels are very lucrative because if you look at the technical structure, there is a lot of buying intent which is evident going by the price setups at the levels of 460, 470 zone. So right now, as the price action suggests, there is going to be a pullback which most probably can see the stock sailing back to levels of 540, 550. This might be seen in a time horizon of maybe a 3 to 4 months scenario. So it's more of a trading call. 3 months, if 540 targets work with you, you can consider buying Vun Beverages at the current market. Being a neutral setup, we are at the lower end of the range, and a pullback of 540 looks likely. So that is the trade setup for Vun Beverages. Buy, but with a 3 month perspective is the call.
Call coming in on Vun Beverages with a 3-month perspective. But we also have Mohit, who has written to us from Ludhiana. He holds about 350 shares of Fortis Healthcare, which were bought at 270 rupees per share. The stock currently is at 720, and I was going through the stock history. The stock was trading at 270 levels somewhere in 2022. So he's clearly a long-term investor. But Akshay, if you can give us a perspective, he's asking with a time horizon of 2 years. What will your view be on Fortis Healthcare?
Yeah, with a horizon of 2 years, yes, it's a very comfortable space you're in, giving that much time to the script, because technically it's in a very strong uptrend. Just that the last 4 to 5 months has been more of a time correction, since the stock has been trading in a sideways range, 750 acting as a strong resilience zone, and 600 being the support zone. But eventually, the way the setup is, you will soon see a breakout of 750 on the cards, and the stock most probably heading for levels of 875. So that's the target projection right now, going by the current data readings. 875 is the target. 2 years horizon is where you look forward to, and 600 is the support zone. So hold is the call for Fortis Healthcare.
Okay, Okay, whole call on Fortis Health. Let's move on to the next query, and it's coming in from Dr. S.N. Singh, who's a senior citizen writing to us from Prayagraj. Akshay, he wants to know the prospects of Asian Paints and HDFC Bank going ahead. If you could share with us some 6-month or 1-year targets for both Asian Paints and HDFC Bank.
Well, technically, Asian Paints is trading in a negative price structure. Now, if you look at the broader charts on the monthly charts, you had a scenario where the stock had seen a range breakdown that was 5 months back at 2,700. So that was the point where, which was the negative development in the stock. Last 4 months have been more or less range bound, but the broader outlook continues to be negative. So really, I do not see any technical evidence as of yet to recommend a buy call in Asian Paints. So it's an avoid for me. And if you can please repeat the other stock, please.
Okay, so that's the take coming in on HDFC Bank and Asian Paints rather. But Akshay, what about HDFC Bank? What's the outlook over there?
HDFC Bank is in a strong technical price structure. So recently you have had a range bound or a sideways price consolidative action, but the clarity emerging is 1900 is slowly building up as a short to medium term consensus support base. So hold, even if you are a long term, medium term, or a short term, till 1880 holds. I think the view continues to remain positive. Long term is obviously positive, but from a short term perspective, to till 1880 holds, you may have another bout of momentum pickup, which can see the stock heading for levels of 2000 plus.
That's the view coming in on HDFC Bank and Asian Paints. But we have KR Balan, who's a senior citizen, and he's asking for a view on ProteinE Gov. Remember, the stock has been in focus for the last several trading sessions. He is holding about 100 shares at 1550 rupees per share, and the stock has clearly tanked over the last 3 to 4 odd trading sessions, currently at 988. And apart from that, he also holds Aditya Birla Capital at the purchase price of 195, and he's asking whether he should continue holding these positions or average or sell out and shift to some other stock. What will your view be on both these counters, ProteinE Gov and Aditya Birla Capital, Akshay?
Yeah. So ProteinE Government Technologies Limited clearly is in a negative trend as far as the price reading goes. You had the stock breaking its support zone of 1200. This happened 5 to 6 trading sessions back, post which also there was a strong gap down opening. I believe there was some news in this. Volumes were pretty significant on that gap down, and clearly it was the liquidation which was evident in this move. So technically the structure is weak, and avoid or sell is what the recommendation is for ProteinE Government Techno Limited. And as far as AB Capital goes, yes, at the levels of 222, I think there is some more steam left in the stock. 240 is the upside you can look forward to within a time horizon of a couple of months. That's the point where you take profits in the
Right.
stock.
Welcome back. You're still tuned in to Buy Now, Sell Now. This is a show where we answer all your stock-related queries, and holding steady for the markets. Nifty is now nearing that 25,000 mark. Nifty Bank well above that 55,300 mark. But we have Akshay Bhagwat with us and several stock-related queries that have started coming in. And we have Venkateshwara Rao, who has written to us, and he is asking for Akshay's advice on 2 stocks. One is ITC and the other one is M&M. He wants to purchase both these counters at the current market price. Akshay, what will your view be on ITC and M&M, both these stocks?
So firstly, ITC has been in a range since the past 1 month, and it's time that the stock stages a positive breakout of this range. The broader view is positive. It's just that the short to medium term has been confined in the range. Going by the volumes and the delivery action, the possible indications are that the stock has been bought into or accumulated. The breakout point for the stock would be the levels of 440, after which you can expect an explosive move which can see the stock heading up for levels of 460. So hold or buy is the recommendation for ITC.
Hold or buy for ITC, but actually there was also another stock in that query, M&M. What's your view on that as well?
Yeah, so the auto space has been in the limelight for the month of May, and if you look at the broader technical setup of Mahindra and Mahindra, it is positive. Just that the last few trading sessions has been stuck in a range. So the support zone for M&M is 2985. We are trading around 3016, and looking at the broader chart structure, M&M, the upside targets of 3250 are still open. So expecting a recovery to be seen in M&M very soon, and 3200 is the target for which you can hold for.
Welcome back. You're still tuned in to Buy Now, Sell Now right here on ET Now and holding steady for the Indian markets. Nifty now near that 24,900 mark, and Nifty Bank is also holding up with gains over 450 points in today's trading session. We already have Ruchit Jain with us, and we now have Ajit Mishra, Vice President Research, Religare Broking, now joining us. Gentlemen, thanks so much for taking your time out. And we have a query that we were discussing, in fact, before we cut in. We have Swati who has written to us, and she's asking for a long-term view on Dixon and Astral, and she wants to buy over here, and she's asking for the right buy price to enter with a long-term perspective. Ajit, what will your recommendation be on this particular stock?
Yeah, good morning, Ashisha. So, Ashisha, Dixon post numbers, we are seeing profit taking. The stock has done exceptionally well in the recent past. So now we are seeing more of a normal decline post result. So for the long-term view, I believe that 13,500 is a very strong base now. So that is the area basically where one can look to go long. And in case if somebody is willing to accumulate, maybe they can start even from the 14,000 levels mark as well. Astral, on the other hand, post this sharp corrective phase, means from the record highs of roughly around 2,400, 50% kind of a retracement that we witnessed from the record highs, and now we are seeing reversal and recovery. So here, I believe that even at current price, one can look to accumulate from the long term view, and positionally around 1800, 1750, that would be the zone where it might face the resistance first. So Astral can be bought at current levels. For Dixon, you should wait.
Okay, Astral buy right now, wait for Dixon. That's the call coming in from Ajit. We'll move on from that query, and Ruchit, we'll come back to you. Next query coming in from our viewer, Mr. Ajit Tal. He's writing to us from Pune, and he's got IRFC 1225 shares at 133 rupees per share. He's asking if it's advisable to hold for the long term, and along with that, he's also got GAIL India 1000 shares at 178. He's asking if IRFC and GAIL, both of them, are good to hold.
We have seen a good amount of price rise as well as time-wise correction in most of the railway stocks in last 8 to 10 months. But of late, if you look at last 1.5 months, many of these names have started at again forming that high top, high bottom structure, that too supported by rising volumes. So I think these are not the levels where one should look to exit any kind of existing long positions in IRFC. As of now, my advice would be to hold on from a long-term perspective and expect target somewhere around 165. And once the stock comes around 160, 165, then you can take a review at those levels in IRFC.
Okay, so that's the word coming in on IRFC, but we also have a few more queries that have come in on several other stocks. First up, let's talk about REC. We have Tina who has written to us. She's holding about 500 shares of REC purchased. It currently is trading at 500, and she is sitting with a loss on this particular holding. She's asking if she should continue holding REC or switch to another stock, and if at all the recommendation is to switch to another stock, which will that idea be? Ruchit, what will your view be on REC, and if at all she has to exit, any other stock specific idea that you can share with us?
Within the NBFC space over last few months, last couple of months. So I think we may see some pullback move, but in this pullback move, there are certain other NBFCs such as Chola Finance or Shriram Finance, which could show a relative outperformance compared to REC going ahead. So I think it would be it would be good to switch to from REC to other NBFC stocks such as Chola Finance or Shriram Finance, where the broader trend seems to be much positive.
Take coming in. Ajit, let's come to you for the next query, and our viewer Jayesh has purchased 3,000 shares of Hindustan Copper at a price of 289 rupees. He's asking if he can add more at the current level. Would that be prices at 289? So he's looking to average his holding. Would you advise that?
So metal as a pack, yes, we are seeing sign of reversal. In fact, if you see that some of these stocks, they are anyways quoting closer to their record highs. Hind copper also, we are seeing sign of reversal forming almost like after 2.5 months of consolidation. There's a possibility that we might see the stock inching towards 250 area, which coincides with the long-term averages. But in case if it was a trading position and he got stuck and that's why he wished to average, then definitely he should maintain a strict stop loss in case if he is adding to average down his cost. Though it's not recommended, to average down your trading position, especially the loss-making trading position. But otherwise, 210 should be your strict stop loss in case if you wish to add at current levels, and closer to 250, you should review your position.
10 should be your stop loss, and you should look at exiting your position at 250 odd levels. That's the view on Hindustan Copper. But we have Balakrishnan, who has written to us from Chennai. He's holding about 100 shares of Aarti Industries for about 3 years and sitting at a loss of more than 25%. He's asking whether he should continue holding this position, average out, or exit from this particular position. So Aarti Industries is the stock that we are talking about. Ruchit, what will your view be on this stock, Aarti Industries?
So yes, the stock has seen a decent correction and an underperformance within the chemical space also. But we believe that these are not the levels where one should look to book losses or exit from existing long positions, because somewhere the stock has already formed a good support base around the recent swing lows of 350 to 360. Now the 50-day exponential moving average stock is coming for around 440. So I think it would be good to hold on the positions and wait for some pullback move maybe towards 530, 520 kind of levels. Then you can again take a review at those levels. But at current levels, I won't advise like booking losses. So hold on your existing positions if you have kept so much patience. Then I think no, still you should continue to hold on for a move.
Aarti Industries. Ajit, coming to you. Next query coming in from our viewer Satya. He's asking about a fresh investment on Gland Pharma and Tata Tech for the next 12 to 18 months. He's asking if these targets could be expected in the range of 25 to 35% in the next 12 to 18 months for Gland Pharma and Tata Tech. What's your view on the fresh investment in both of these counters?
So see, both stocks are underperforming within their respective sectors, though we are seeing sign of rebound or reversal, short-term reversal rather, I would say, in Tata Tech. But in Gland, situation still look bleak to us. So I would recommend, in case if you are making investments for next 9 to 12 months, stick with the top performers, stocks which are showing relatively higher strength within the sector, and avoid these names just because that they were trading closer to their 52 weeks low and we are seeing some sign of rebound. That doesn't mean that the trend has reversed yet. So within this space, I feel that from the IT space, TCS, Infosys, HCL Tech, these are the best candidates that one can look at in the large cap basket. Then we have Coforge from the mid cap basket, which we can consider. And from the pharma space, Divis Lab, Dr. Reddy's, these are the better candidates to look at.
Understood. So that's the view on the pharma sector, Gland Pharma and Divis Laboratories. But we have Aayosh, and he's asking for a view on the hospitality sector. He wants to make an entry into either of these two, ITC Hotels or Indian Hotels or IHCL, and he's asking whether it is the right time to enter into either of these. Ajit, if he is looking from a perspective of 3 to 4 year period, what will your advice be for ITC and Indian Hotels?
So see, Indian Hotel, we all know the kind of outperformance the stock has experienced. ITC, now we have started seeing fresh traction. So probably we can see better returns in terms of long-term investment. So definitely he can consider ITC hotels in comparison to Indian Hotel for next 3 to 4 years.
Okay, so that's the take on ITC and ITC hotels. But Ruchit, coming back to you, we have our viewer Suda Ahuja who's writing to us. She wants a 2-year time frame and a 2-year view on Emphasis, Shriram Finance and L&T Finance. What are you making of these counters, and would these be advisable to invest into right now for a 2-year time frame?
I think yes, partial positions can be taken because within the IT names, we believe that the price-wise downtrend at least is over around the recent swing lows. prices have started forming gradual high top, high bottom structures. So we can expect a positive momentum, but definitely it would be slow and gradual up move. So emphasis can be bought, and we are already bullish on the NBFC space. As we told that, this entire uptrend which has started since the mid of March was initially led by the banking and the NBFC stocks, especially the private sector banks and the NBFC names. And if you look at last 1 month, there has been some time-wise correction within this space where the Bank Nifty as well as the Nifty Financial Services Index has seen some sort of time-wise correction or consolidation, but the immediate supports have not been breached in either of these indices. So the broader trend still remains positive, and hence we are expecting the momentum to continue in the NBFC space once this time-wise correction is over. So both these names, Shriram Finance as well as LT Finance on chart, looks much positive. So all the three names good. If you have some mid-term perspective, then can be bought at current levels.
Can be bought at current levels, Shriram Finance and L&T Finance, that's the word coming in. But we need to slip into a short break on that note. We'll try and address many more queries on the other side of the break. Stay tuned.
That note, we'll wrap it up on this edition of Buy Now, Sell Now. Viewers, keep writing to us. We'll once again begin addressing all your queries on Monday at 11 a.m. But till then, it's a goodbye from Ashesha and me. But markets at noon is up next.